Over the past 6 to 9 months, we've been highlighting some of the fears and concerns we have as interest rates rise across the world and any unintended consequences of that. Well, there's a real-time example now playing out in the UK, when the new Prime Minister and the new Chancellor of Exchequer came into power in early September. They came out with a mini budget, initially to help people with their energy bills, but also reduce taxes at the same time to try and get the economy moving away from a possible downturn. The markets didn't like this, and that was reflected in higher bond yields, which led to a lower currency. And that led to problems for the pension funds, of which the Bank of England had to step in and help bail out the pension funds. Now the markets obviously voted with their feet about these policies, and at the time of this video, it looks as though some of those policy will be reversed over the next few weeks. So for the UK now, it's in a difficult position where they were trying to grow themselves out of a downturn. Whereas now, if they have to reduce, increase taxes to where they were, then the problem for the consumer is going to be that he'll have less spending power, and that will spiral the economy further into recession or deeper into recession, which will again have an impact on equity markets and obviously bond yields, because inflation is still high, and the Bank of England will still look to raise interest rates. So this maybe is a trailer to what may be happening in the world as the Federal Reserve increases interest rates, more likely like 75 basis points in November, following the high inflation figures yesterday. So, let's be cautious in terms of some of the global events which are playing out, which might affect sentiment in our Indian equity markets too.